Hello everyone, welcome to Oliveboard. My name is Dinkar and I'm going to take the special lecture series on RBI notification and circular, especially for RBI Grade B 2021 examination. Let's start. We will be starting with our lecture 8 on RBI notification and circular, and here we are going to cover 2 months of 2020, that is August 2020 and September 2020. There are few important points that we have to mention over here. So that will be coming during the type of notification. So let's start with the first notification. The first notification is regarding the resolution framework for COVID-19 related assets. So all of you know that year 2020 has gone in the total COVID-19 stress. So because of that, many of the loans that people have taken from the banks and various places, so they are not able to pay the loans on the proper time. So because of that, RBI has come with the resolution framework for COVID-19 related stress. So who can do the resolution in this resolution framework? So RBI has given some guidelines. So the borrowers who have a proven track record, that the borrower who have a very good track record, they can go for this resolution framework. But MSME borrowers whose aggregate exposure is not more than 25 crore and financial service provider, advance extended to the central and the state government, local government bodies, loan provided to own staffs and personnel, etc., these are ineligible for the loan restructuring. So those who have taken personal loans, this resolution mechanism may include rescheduling of the payments. So those who have taken personal loan, so there can be rescheduling of the payments, like the payment can be delayed by some time, and there can be a conversion of the any interest incurred in the form of a credit facility. And they can also provide moratorium for a maximum of 2 years based on the assessment of the income of the borrower. And for all the non-personal loan, the single lending institution can decide on the resolution framework. So all the non-personal loan, the lending institution, that the institution that who has given the loan to these borrowers, they can decide based on the type of borrowers and based on the board approved policies of their bank or institution. So by this circular, the central bank has addressed the issue of long-term impact and hardship that is faced by the COVID-19 pandemic. So since because of there is a lot of hardship that is coming because of the COVID-19 pandemic, so because of this, the RBI has come up with a resolution framework for the borrower, so that they can restructure their loan and they can pay based on the type of the situation that is coming in the future. Now we move into the next notification, that is micro, small and medium enterprises MSME sector restructuring of the advances. So here MSME sector has received some of the advances for their working. So RBI has aligned the guideline on restructuring of the advances with the resolution framework for COVID-19 related stress. The existing loan that is extended to MSME sector, which are classified as standard, they may be restructured without rating downgrade. So whatever loan that has been extended to MSME and that has been classified as standard, they can be restructured without any downgrade, but there should be some fulfillment of the certain condition. So here RBI has asked whatever the loan that has been extended to MSME and which are classified as standard, they can be restructured without downgrading the rating, and but they have to follow some certain conditions. So as on March 1st 2020, the aggregate exposure including non-fund based facilities, so we will understand what is non-fund based facilities, of the bank and non-banking financial company to the single borrower is not in excess of 25 crore. So this is the one condition. It was widely speculated that the windows for loan restructuring would be extended by at least 1 year, which the RBI has done in the wake of the hardship faced due to the current pandemic. So what is non-fund based facilities? So non-fund based facilities, this fund based facility are those type of facilities provided by the bank to its borrower in which there is no immediate outflow of the cash. So these are the type of facility that is provided by the bank to its borrower where there is no immediate flow of any kind of cash from the bank, but it may become the liability of a financial liability if the customer, that is mean who is taking this credit facility, if they dishonor their liability, so bank has to fulfill this liability. So in this non-fund based facility, there is no immediate outward flow of cash, but it may become a financial liability of a bank or an institution if customer refuses to honor it. So there are two types of these facility, that is letter of credit and guarantees. So you know that a letter of credit is given by the bank when you do international trade. guarantee is given by the bank sometimes, so that the proper trade has to be taken place. So because of that, the bank gives guarantee that if the borrower is not paying the money, the bank will pay the money. So these are types of the guarantee that is given by the bank. So here there is no immediate flow of the cash, but it may become a financial liability if the person who has taken the loan refuses to pay it. So now we have a Basel III capital regulation treatment of debt mutual fund. So here we all know that Basel III are the type of regulation that has been come due to the hardship that has been faced during 2008-2009. So because of that, Basel III framework has come into place. So here this is regarding the treatment of the debt mutual fund and exchange traded fund. So RBI has revised the Basel III capital regulation treatment of the debt mutual fund or the exchange traded fund. So investment by the bank, so any investment by the bank in debt mutual fund or exchange traded fund, it will attract the general market risk of 9%. So this is the important thing. This is related to the treatment of the debt mutual fund. Earlier what was happening is the investment in debt mutual fund were treated on par with the equity. Earlier any debt mutual fund by having the investment bank were having, they will be treated on par with the equity. Due to this, the bank has to set aside more capital when they invest in the mutual fund routed through them directly. So the recent move will increase the liquidity in the banking system. So because of the recent move, there will be increase in the liquidity in the banking system, and it will make the bond as an asset class more attractive for the bank. So it will, because of this, the bond will be looking like an asset, and it will be feeling like it will be very attractive for the bank to get these bonds, debt mutual funds and exchange traded funds. So what are exchange traded funds? ETF are the collection of securities such as stocks which often traded closely in the underlying index. Unlike mutual fund which are traded once in a day, so mutual funds are traded once in a day, but exchange traded fund are traded continuously during the market hours. So this is the difference between the mutual fund and the exchange traded fund. So mutual fund are traded once in a day, and exchange traded fund ETF are traded continuously throughout the marketing hours. These type of instrument can be of equity, bond or a commodity. Now we have gone to the loan against the gold ornaments. So people normally used to take gold loan against the gold ornaments and jewelry, so for non-agriculture users. So here one notification has come. RBI has revised the guideline on loan against gold ornaments and jewelry for non-agriculture end user during the ongoing pandemic. Earlier, the permissible loan to value ratio of the loan against the pledged gold was for non-agriculture was 75%. That you can give only 75% of the value as a loan to a person for non-agriculture purpose. Now it has been increased to 90%. So you should know that now from 75% it has been increased to 90%. So because of this recent move, this will provide much liquidity to the households in the wake of the ongoing pandemic, and it will mitigate the hardship that has been faced by the people. Loan to value is ratio. What is the loan to value ratio? Loan to value ratio is the amount of a loan that can be sanctioned and the price of the asset which is given as a collateral to avail that loan. So this is loan to value ratio. Now opening of a current account. So here RBI has asked for discipline during opening of a current account. As RBI has come to notice that many current accounts are working without proper discipline. So RBI has come with the guidelines where proper discipline has to be maintained during the opening of a current account. Banking are advised to not open any current account for the customer who has availed any kind of cash credit or overdraft facility. If the prospective customer has not availed any kind of credit facility from the banking system, they can open the current account after their due diligence as per their board approved policies. The bank can open the current account of a borrower whose exposure is less than 5 crore by obtaining the undertaking from them stating that they will inform the branch as and when their exposure breaches the threshold limit of 5 crore. So the bank are asked, they can open the current account to the borrower whose exposure are not exceeding, whose exposure is less than 5 crore rupees, and they can and the bank should take an undertaking from them stating that they will inform the bank if their exposure or threshold breaches the limit of 5 crore. Further, bank should not route withdrawal from term loan through current account, and these loan are for a specified purpose. The bank are requested to ensure compliance with these instructions. The notification will place necessary checks and balance in a system for borrower who use multiple accounts and use the blind spot. So here RBI wanted to put necessary checks and balance, and also to make sure that people should not use the blind spot that is coming by opening the multiple current accounts. So RBI has asked to have a proper discipline during the opening of a current account. You should not keep on opening current account for every time. So you should have a proper checks and balance, then only you have to open a current account. So online dispute resolution system for the digital payment. So everybody knows that nowadays people are mostly using digital payment for every purposes, like anything, Paytm, NPCI, National Payment Corporation of India, then our Bheem app and all those things. So these are all the type of a digital payment. So RBI has asked to introduce the online dispute resolution system for the digital payment. So online dispute resolution is a system driven and rule based mechanism with a zero and minimum manual intervention. So here RBI don't want that there should be any kind of manual intervention. So it could be either zero or it should be rule based mechanism. In the view of the payment system vision of 2021 of the Reserve Bank, the authorized payment system operator of both the banks and the non-bank of their participants are advised to put the online dispute resolution system in their respective system by 1st January 2021. So ODR is a mechanism that would be for dispute, any kind of dispute that is coming during the digital payments, and the grievances that is related to failed transactions. Sometimes there is a failed transaction, you do a transaction but it shows like a failed transaction, and the customer should provide access for lodging the same irrespective of such transaction being on us or off us in nature. For lodging any complaint, the customer will be provided with one or more channel, like customer can use any kind of web-based, paper-based complaint form, IVR, interactive voice record system, then mobile application, call centers and SMS. These service provider can progressively increase the number of channels. So based on various type of channel, make sure that the lodging of the complaint should be accessed by various type of customer through various channels. For mobile phone based system like UPI, the customer should be provided the facility to lodge complaint from which the payment has been done. So for the unified payment interfaces, RBI is asked to make sure that the customer can raise the complaint from the same mechanism through which the payment has been done. So this is regarding the online dispute resolution for digital payments. Reserve Bank has stated that the ODR arrangement would be extended to the dispute and grievances and other failed transactions based on the experience gathered. Moreover, the customer can approach the respective ombudsman. So you all know that various banks and payment banks have appointed ombudsman who work on these grievances, and if the grievance has not been resolved within the 1 month, they can reach to the respective ombudsman. So ombudsman is a type of a person who has been appointed by various banks who will look for all these complaints. So what is payment system operator that we have listened over here? So payment system operator are defined as the entity responsible for operating the payment system and ensure that the system is operating in accordance with the guidance that is released by the RBI. These operated are authorized by the central bank to set up and operate in India under the Payment and Settlement Act of 2007. So this is all related to our online dispute resolution. Now offline retail payment using card, wallet, mobile device. So there is one pilot project that has been going on. So RBI has introduced an offline retail payment scheme on pilot basis. Pilot basis means this is a scheme is applicable only for few places. So first the pilot base has to be checked. If the pilot scheme is proven success, then it will be implemented throughout the India. So this scheme has to be go till 31st of March 2021. Under this pilot scheme, authorized payment system operator, bank and non-bank will be providing the offline payment solution. So here payment system operator will be providing offline payment solution using card, wallets, mobile devices for remote or proximity payment without any additional factor of authentication. So here the payment system operator has been asked to provide offline payment through various using card, wallets or mobile devices without using any kind of additional factor of authentication. The central bank has started this pilot project in order to push and the adoption of the digital payment in the remote areas. where the transactions are hampered because of the slow internet or no internet or erratic internet connectivity. The Reserve Bank has clarified that a decision on formalizing such a system will be taken after the pilot project, after we do some findings in the pilot scheme. So what is additional factor of authentication? So you should know what is additional factor of authentication. It is the second step of authentication in a two-step verification for effecting a transaction. So here it is like that. Here the payment system is verifying you two times, maybe one by your face, and sometimes by your fingers, and sometimes by your Aadhaar card. So here there can be two type of authentication, so that payment system operator should know that this is only you are the only the person. So but here we are removing the any additional factor of authentication in order to increase the digital payment in the remote areas. The digital factors of authentication is generally dynamic, which is valid for a specified period of time. Now, system-based asset classification for urban cooperative banks. So, RBI has decided to implement the system-based asset classification. System-based asset classification is related to, here system will decide what is the quality of an asset, whether it is getting downgraded, whether proper interest has been paid, how the asset is working. The central bank has defined the system-based asset classification as an asset classification, both upgrading and downgrading, carried out by a computerized system in an automated manner on an ongoing basis. So here the computer will decide what is the quality of the asset, whether it is proper, whether it is upgrading, whether it is downgrading. So based on that, you can it's like a computerized mechanism where you can check the quality of the assets. Urban cooperative banks whose total assets are exceeding rupees 2000 crore on 31st March of 2020 are advised to implement the system-based asset classification, and UCB who do not meet the above criteria, they are encouraged to implement this type of asset classification for their own good. The recent decision is another step in a series of steps that has been taken by the central bank in the aftermath of the Punjab and Punjab Maharashtra Cooperative Bank fiasco. So because of this problem that has been happening in the Punjab and Maharashtra Cooperative Bank, so this type of guidelines are being issued by the RBI in order to make sure that there are proper asset classification, and the bank should know when to act, when not to act, and whether proper payment has been done, and how are the quality of the assets. So whether you can upgrade it, whether you can downgrade it, and at the same time you can inform the RBI regarding the assets also. So this is all about system-based asset classification for urban cooperative banks. Now we have a framework for authorization of Pan-India umbrella entity for the retail payments. So RBI has released the framework for authentication of Pan-India umbrella entity for retail payment. As per the guidelines, an entity can be incorporated in the Companies Act focusing on the retail payment. So this is regarding the retail payment. The said entity may be for profit or a section 8 on the non-profit company. The eligible candidates are, they must be resident of Indian citizen and have an experience of 3 years in the payment ecosystem, and they have a minimum paid up capital of rupees 500 crore. The umbrella entity is permitted to set up and manage and adopt new payment system in the retail payment, which can be automated teller machine, white label point of sale machine, Aadhaar based payment, remittance services, new payment method. So they can all do all these things. The company can also operate clearing and payment system for participating banks and non-banks. So this is regarding the framework for authorization of Pan-India umbrella entity for retail payments. The central bank expects the new system to interact and to be interoperable to be extent possible with the system operated NPCI, the lone non-profit player in the market. The entity shall conform to the norms of the corporate government. So those entities, those who are working in the retail payment and those who are applying for the retail payment, those should follow all the norms of the corporate governance. And the application for the setting of an entity must have a detailed plan. So those who are putting application for this kind of entity, they should have a proper detailed business plan covering the payment system proposed to be set up and how it is to be operated. So what is Payment and Settlement Act of 2007? So Payment and Settlement Act of 2007 provides for the regulation, supervision of the payment system in India and designate the Reserve Bank of India as an authority for that purpose in all related matters. The central bank is authorized under the act to constitute a committee of the central board known as Board of Regulation and Supervision of Payment and Settlement BPSS to exercise its power and perform its function and discharge its duty under the statute. So this is regarding the Payment and Settlement System Act. Now we have moved into the notifications of September 2020. So under September 2020, we have a first notification regarding SLR Holding in STM category. So what is STM? SLR is statutory liquidity ratio. We all know that SLR. And what is STM? It is held to maturity category. RBI has revised the limit for statutory liquidity ratio holdings in the held to maturity category. Under the revised direction, the bank are allowed to hold the SLR security under STM categories upon to an overall limit of 22% of the NDTA, provided the security are purchased on and after 1 September 2020. So what is SLR? SLR is the ratio of bank net demand and time liabilities, which should be kept in the form of liquid assets such as cash, gold, government securities. The bank can earn the interest on the amount kept under the SLR requirement. So RBI manages the bank ability to extend credit based on the SLR requirement. So what is NDTL? NDTL is time liability plus demand liability minus deposits with the other bank, whereas time liabilities are the fixed deposit, recurring deposit, and demand liabilities are current in the saving account balance and demand draft. So this is regarding the SLR holding in the STM category. Now we have moved into the master direction regarding the priority sector lending, targets and classification. So here RBI has given some master direction regarding the priority sector lending. They have revised the targets and the classification. RBI has revised the direction pertaining to priority sector lending, with a special focus on the categorization and the assigned targets. Under the fresh guidelines, agriculture, MSME, export credit, education, housing, social infrastructure, renewable energy, and other categories under the PSL. Loan not exceeding rupees 1 lakh per borrower to self-help groups, loan sanctioned to state-sponsored organization for scheduled caste and scheduled tribe, and loan up to rupees 50 crore to the startups that are engaged in the activity other than agriculture and MSME are also eligible for the PSL target. PSL target for domestic commercial banks. So the target for PSL for domestic commercial banks would be 40% of their adjusted net bank credit. However, for regional rural bank, that is RRB, and a small finance bank, the proportion should be 75%. For urban cooperative bank, the PSL target has been revised to 75% of the adjusted net bank credit from the existing 40%, which should be achieved in an incremental manner. So for the urban cooperative banks, from 40% to 75%, that has to be achieved in an incremental manner by every financial year, by raising it to by 5% at the end of each financial year and reaching the stated target by 2024, 31st March of 2024. Moreover, the loan limit for renewable energy purpose, such as solar based power generator, biomass based power generator, windmill, micro hydel plants, have been doubled to rupees 30 crore per borrower. So there has been increase in the limit that has to be given to the person who is availing the loan for renewable energy purposes. From it has been doubled to rupees 30 crore per borrower. So these are the revised target for priority sector lending. Then we have a long form audit report, LFAR report review. Reserve Bank has reviewed long form audit report and released the revised format. So RBI has released a revised format of that report that has to be used from the financial year 2021, 2021. So what is according to LFAR, LFAR is the overall objective. What is the overall objective is should be to identify and access the gap and vulnerable areas in the business operation. So as per this LFAR report, long form audit report, the main aim of this report is to check the vulnerable areas in the business operation, risk management, compliance, and efficacy in the internal audit. So all these things has to be included in the LFAR report. So this is the new form that has been released by the RBI. The notification is necessitated due to the large scale changes in the size, complexity in the business model, and risk in the banking operation. So why this form has been changed? The form has been changed because there has been increase in the size of the business. There has been a different complex model of the business that are being coming. There are too much of risk has been involved in the banking operation. So because of that, the LFAR form has been revised in order to check all these things related to business operation, risk management, and compliance. So because of that only, this long form audit report has been revised. Now we have again resolution framework for COVID-19 related reset parameters. So we have learned in the first slide in the August 2020 regarding the resolution framework for COVID-19 related stress. So what are the financial parameters that has to be taken into consideration in order to reach whether we can give some relaxation to anybody or not? So which parameter has to be checked? So there has been a committee that has been set up by the government, by the Reserve Bank under the Shri KV Kamath, for recommendation of the required financial parameters. So RBI has released the financial parameters with sector specific benchmarks. Central Bank has envisaged to constitute an expert committee which would recommend on the required financial parameters. So this expert committee was under KV Kamath ji. The central bank has released the sector specific threshold ceilings on the floors and the case may be for the key ratios. So these are the key ratios that has to be taken into consideration, like total outside liability divided by adjusted tangible net worth. Then we have another ratio, that is total debt by EBI DTA current ratio, then debt service coverage ratio and average debt service coverage ratio. So these are some of the financial parameters that has to be taken consideration in order to reach regarding any kind of resolution framework that has to be given for COVID-19 related stress. So these are the parameters, and these parameters are being suggested under the chairmanship of the KV Kamath sir. So the lending institution are advised to consider the prescribed threshold limits of the key ratio in the process of resolution assumption with the respective to eligible borrowers. So what are these? Total outside liability divided by adjusted tangible net worth. So the ratio is defined as the addition of long-term debt to the short-term debt, current liabilities and the provision along with the deferred tax liability divided by the tangible net worth net of the investment in the loan. So these are the ratios that has to be taken into consideration in order to make sure the proper resolution framework for COVID-19 related stress. Then what is total debt to EBI DTA ratio? That is, the ratio is defined as the addition of the short-term and long-term debt divided by the addition of the profit before tax, interest and financial charges along with the depreciation and amortization. Then what is debt service coverage ratio? Debt service coverage ratio is the addition of the net cash accrual along with the interest and the financial charges divided by the addition of the current portion of the long-term debt with the interest and the finance charges for the relevant year. So these are the ratio that has to be into the proper threshold limits in order to provide any kind of resolution framework to any kind of borrowers. You should know this is very important. This committee has been chaired by under the KV Kamath. Now, compliance function in bank and the roles of the chief compliance officer. So we all know that there is a chief compliance officer in every bank. So Reserve Bank has issued the guidelines for the compliance function in the bank and the role of the responsibility of the chief compliance officer. So here RBI has given the detailed guidelines of the role and the responsibility of the chief compliance officer. Chief compliance officer has to be appointed for the minimum fixed tenure of not less than 3 years. CCO should have a direct reporting to the MD and CEO or the board of the bank. CEO and compliance function shall have the authority to communicate with any staff member and have access to all the records and files that are necessary for enable them to work to carry out his interested task and responsibility with respect to compliance. By this circular, the central bank wishes to bring uniformity in approach followed by the bank. So the role of the chief compliance officer is to make sure that all the banks are working with the proper compliance as per the guidelines issued by the Reserve Bank of India. The role of this and responsibility of the chief compliance officer is this. The main aim of this is to make sure to bring the uniformity in the approach followed by the banks. So this is all related to the chief compliance officer functions. Now, automation of the income recognition, asset classification and provision process in the bank. So here Reserve Bank has emphasized on making the process of income recognition and asset classification automized. Banks are advised to cover all borrower accounts including temporal overdraft irrespective of size, sector or type of limit, automated IT system based for asset classification, upgradation and provisioning processes. The calculation of provisioning requirement, income recognition, derecognition in case of the impaired assets. So here a proper calculation has to be done regarding the provision requirement, income recognition, derecognition. The system should be handled both downgrade and upgrade of account through straight through process. So here there should be a straight through process where proper income, where upgrade and downgrade can happen based on the automation. In a separate application outside the central bank system is used as a system for non-performing asset, non-performing investment identification. The system must have access to the required data. So whatever the system that has been IT enabled system for automation, that system should have a required data from the central bank system and or other respective application of the bank, and the borrower investment account shall be updated back into the CBS automatically. So all the data has to be stored digitally so that that can be used in a process of automation for the income recognition, asset classification. So RBI wanted to make this process whole automized by putting all the data that is happening in a bank in an automatic CBS channel, and from where that the CBS can automatically upgrade the data, and all the things has to be updated in the CBS automatically wherever applicable through STP. By this circular, the regulator has placed a deadline for migration of the system based, as it is observed that the bank are resorting to the manual intervention in a routine manner. So here RBI has given some proper deadline that the bank has to follow the automation of the income recognition and asset classification, because RBI has come to a notice that most of the bank are still following the manual method of income recognition and asset classification. So RBI wanted that all the banks should follow the automation, and they have to achieve this process in a proper date or proper deadline. So what are the non-performing asset? Non-performing asset is a loan account in which a borrower has not repaid either the principal or the interest that is incurred for a period of 90 days. So a non-performing asset can be broadly classified into three types. So there are three types of non-performing assets: substandard asset, less than or equal to 12 months; doubtful asset, remained in above category of 12 months; then lost asset, that is account which are considered very little of value. That means here you don't have any chance of getting your money back. Then what are non-performing investment? Non-performing investment, we come over here. Non-performing investment is an investment done in a security where interest principal are in arrears. Similar to a non-performing asset, NPI can be categorized into three categories: interest installment due is unpaid for more than 90 days, and investment in the debentures and the bonds. So now we have another notification, that is Master Circular on Deen Dayal Antyodaya Yojana National Rural Livelihood Mission Day, NRLM. This is a very important scheme of the government for poverty alleviation. RBI has issued a Master Circular on Deen Dayal Antyodaya Yojana National Rural Livelihood Mission. NRLM is a flagship program to promote poverty reduction through building strong institutions for poor, especially for women, and providing these institutions a range of financial service and livelihood. The flagship program adopts a demand-driven approach. So here this program is based on the demand-driven approach, which gives the state freedom. Here the state are giving freedom to formulate their own state-specific action plan. Under this policies, Day NRLM, self-help groups which are in existing for a minimum period of 3 to 6 months and follow the norms of good self-help group, they would be provided a revolving fund support. The intended purpose of the revolving fund is to strengthen the institutional and financial management capacity and good credit history within the group. So here there will be a revolving fund that will be provided to any kind of self-help group, those who have a very good financial management and have a good credit history. From the date of implementation of the NRLM, interest subvention would be provided on the lending amount in place of the capital subsidy. So here, instead of providing capital subsidy, interest subvention would be provided on the lending amount. Self-help group may avail either term loan or cash credit limit loan on both based on their needs. So whatever their need is, they can avail any kind of term loan or cash credit. In case of cash credit limit, banks are advised to sanction a minimum loan of 6 lakh rupees to each eligible self-help group for a period of 3 years with a minimum drawing power, with a yearly drawing power. So what is Deen Dayal Antyodaya Yojana National Rural Livelihood Mission Day, NRLM? It is an improvised version of Swar Jayanti Gram Rozgar Yojana. It is a poverty eradication scheme of a government of India which is supported by the World Bank. So this scheme is also supported by the World Bank. Under this flagship scheme, loans are provided to the weaker section of the society, especially for women, so that there should be people who can come out of the poverty and they can improve their businesses. So what is positive pay system for check truncation system? This has been notification that has come in 25th of September. So RBI has introduced a positive pay system for check truncation system, CTS system. Under the positive pay system, the issuer of the check will share a certain minimum details of the check like date, name of a payee, amount, etc. to a drawing bank through channels like SMS, mobile, internet banking and ATM. So here we are making sure that if the check has been issued by the person and whether the person has himself has issued the check. So here we are doing two-factor authentication. So if you are like writing a check, so now you take a photograph of a check and you upload into the bank website or bank app. Whenever somebody come to draw this check, the bank can see whether the check has been issued by you or not, and if it has not been uploaded by you, the bank can dishonor the check and bank can ask the person to go back and get the check again. So here under the positive pay system, the issuer of a check, so here those who are issuer of the check, the person who is issuing the check, he can take the photograph, he can write the name of a payee, he can like date, amount, drawing bank, and they can send the detail, all these details through a SMS or a mobile app or a internet banking or a ATM to a bank. The shared details, they will be cross-referenced, cross-checked when the check is presented for the CTS, that is check truncation system. Discrepancy, like if any discrepancy comes, it will be flagged by the CTS to a drawing bank and presenting bank, and they will take the redressal measure. So NPCI has been asked to develop a positive pay facility in the CTS. So NPCI has been asked to make a system like this where people can share the photograph, SMS through a mobile app of the check, so that it can be the shared detail can be cross-referenced when the check come for the presentation. The banks are advised to enable positive pay for all account holder issuing check with the amount exceeding rupees 50,000 rupees. So this is the bank has been asked to include this system of positive pay if you are getting any check that is above excess of 50,000 rupees. The facility is not mandatory, but the bank may consider it so in for check having a value of 5 lakhs or more. So since the process is not mandatory, but because of this process there can be a proper cross reference and there will be no cheating coming out of it. So this is just like a security measure. This positive pay system for check truncation system is just especially for the kind of a security that we wanted to provide to the customers. The bank are further advised to create adequate awareness regarding this positive pay system through various SMS, alerts, ATM, website, posters. So the banks have been asked to create awareness regarding this system. The new system will act as an additional layer of security for the customer. So what is check truncation system that we have studied over here? Check truncation system is an electronic image of a check that is transmitted to a bank through a clearing house along with the relevant information like date on the MICR band, date of presentation, presenting bank in the check truncation system. So this is just like an additional measure, additional security measure that we wanted to provide to our customers. So now we have a question that can be expected from this notification of August and September. Revolving fund is related to NRLM, National Rural Livelihood Mission, that we have studied. Which committee gave recommendation of financial parameter for resolution framework for COVID-19 related state? Recommendation on financial parameters. So KV Kamath sir, we have already studied this. Which organization has been asked to develop positive pay facility under check truncation system? Just now we have studied, that is NPCI, National Payment Corporation of India. Day NRLM main aim is the poverty reduction. Permissible loan to value ratio for loan against pledged gold, ornaments and jewelry for non-agriculture purpose has been increased from 75% to 90%. We have already studied. So these are all the type of questions that can be expected from these 2 months of notification. So we'll be coming with the more notification. Please stay tuned. So we all know that RBI phase 1 exam has been over and now everybody will be preparing for your RBI mains examination. So Oliveboard is providing very good live classes and mock tests right now are going on. You can go to Oliveboard YouTube channel and find out all the details regarding the mock test. We will be providing with a separate mock test for each and every subject. Topic tests are there. We have a descriptive English tests are there. So you can go to Oliveboard website and there you can go and register for the various courses for especially for your benefit. And all the best for your exam, and never forget to like, subscribe and follow. Happy learning. Thank you everyone for listening this lecture so patiently. I hope you have learned something from here. Always stay tuned and thank you.